But Jindal Steel and Power was the set of numbers that we were discussing, and on the top line and on the bottom line on a standalone basis, slightly below our estimates. Consolidated didn't do too badly. So a lot of questions really to ask the management on how the steel business panned out, because on a year-on-year basis, there was expected to be a bit of a dip. Quarter-on-quarter, it wasn't expected to do too badly. But Vikrant Gujral is the right person to ask that question. He's the Vice Chairman and CEO of Jindal Steel and Power. Mr. Gujral, thanks a lot for joining us. If you could take us through your numbers this entire quarter, because 305 crores is below our estimates at about 364 crores. We'll focus on the standalone part of the business first. And net sales really came down slightly below our estimates as well, so about a 28% dip. So if you can hear me, Mr. Gujral, if you could highlight those numbers again, just on the standalone basis first, the steel aspect, how realizations and volumes have panned out, and first on the 340 megawatts of power before we address the 1,000 merchant power business.
No confusion between Gujral and Yeah, well, I am Sushil Maru here. I am a director of Jindal Steel and Power. If you are talking about the result, in fact, on Jindal Steel and Power, on a standalone basis, of course, the result is, for this quarter, it is lower. It's about 305 crore profit compared to 450 crore in the last year, the same quarter. But if you look on a consequential basis or consequent quarter, it's higher than the first quarter, 300 crore to 305 crore. This is largely because the turnover is also down by about 28%, and that has happened because the price realization is lower. Like steel prices, when we compare it with the last year same quarter, has gone down by about 43%. And going forward, the same price is continuing. But when we look at the consolidated number, which is better, it's 6% higher in profits, and we have done a profit of more than 800 crore compared to 760 crore the last year the same. And this largely has come from power subsidiary Jindal Power Limited, and the power has done better in this quarter also. Almost about 70% profit is coming from power, and that was the case in the last quarter also. And going forward also, as we mentioned in earlier discussions also, that the power profits are going to basically dominate the total Jindal Steel and Power numbers.
Mr. Maru, my apologies for that earlier, but if we could address the power segment really, because that seems to have come in really well. Your consolidated profit has come in up about 7%. Power has contributed a fair chunk on that. What sort of operating margins are you working at? What are the realizations? And currently, how much is operational? I believe it's about 1,000 megawatts in terms of merchant power. And if you could give us an outline, because 1350 is expected to come in between the December to March period, an outline for the trajectory in your scaling up of the power business, what your realizations are and what margins you're working at.
See, in this quarter in power specifically, we had low PLF. We had about 84% PLF in the second quarter compared to the first quarter of the current year, where we had about 96% PLF. This is largely because we had 2 units under shutdown conditions, and besides, in a rainy season as it is, it's difficult to improve the power generation, and the sale prices also remain suppressed. But if you look at the number, we have done about 515 crore profit in power compared to the quarter of 314 crore in the last year. In fact, when we look at the first quarter of the current year, we have done about 700 crore profit. And we expect that the third quarter and fourth quarter should be better, because the units which have gone under shutdown condition are already started doing well and should do well in the next 2 quarters. And you asked about 1350 megawatt power plant. We are expecting this. There are 10 units of 135 megawatt each, and we are expecting the first unit to go on stream in January, and thereafter every 2 months 1 unit to go for production. So next year and the next to next year will have positive impact of this power plant going on stream.
Mr. Maru, afternoon. Just to get some specific numbers from you on this 1350 megawatt power plant that was likely to come on stream, what are the exact realizations that you're expecting, and the power tariffs as well, how strong are they expected to be? If you could just throw some numbers at us.
See, it's very difficult to comment on the if you are selling a power in merchant, it's very difficult to comment on the tariff, what it's going to be. It all depends. It changes every week, it changes every day, it changes every hour. So it's very difficult. But to tell you that since you have seen the economic growth number and GDP growth numbers, which is picking up now, we feel the demand should remain high and price should remain firm going forward.
Mr. Maru, if you could give us some perspective now on the funding that you've tied up, because I believe if you could firstly reaffirm whether this target is on track by FY13, an addition of about 3,750 megawatts. I believe you've got most of your equity funding in place. Now, this would put you in a pretty easy position to raise a bit of debt. How much more money would you be looking at raising? I believe there are still 2 out of your 3 units that still require financial closure. When will that come about? And in terms of your final debt equity ratio, what are you expecting it to be by the end of FY10 and FY11?
See, when we are talking about 1,000 megawatt, which is already operational in Jindal Power, it's fully tied up and it's already operational, where debt equity is going to be less than 0.5. And there we are going for another expansion of 2,400 megawatt, which will be operational in 2012 and 13. Which is fully tied up. It's financially closed. Debt has been fully tied up. Then another 1350 megawatt, you talked about 3,750. So the second part is 1,350 megawatt, where it's a completely financially closed. Debt has been fully tied up. So it's all it's all completely closed in all respect.
Mr. Maru, if you can tell me a little bit about. Yes, please go ahead.
Now, you asked about the debt equity ratio. Primarily, all these projects have been tied up on 75-25 debt equity basis. But we feel that the debt equity ratio will fall drastically as we go along, as has happened in the existing case of 1,000 megawatt power plant, where we started with 75-25, but now our debt equity ratio is going to be about close to 0.5.
As far as your steel business is concerned, your realizations this time have dropped by a good 40-odd%. What is the way forward now for the business? And if you could also tell us, as far as production and capacity is concerned, how are things looking there?
Well, as I mentioned that about realization, like sponge iron realization is down by about 45%. Steel realization is down 43% in this quarter compared to the last year same quarter. And we feel that whatever average realization is there in this quarter, we feel that should continue going forward. And coming to the production, in fact, we did better in this quarter. Production is up by about 32%. But there is a little higher inventory, which is slowly going out because the demand is coming in now.
Hindustan Unilever numbers are flashing on your screen there, slightly below our estimates in terms of a net sales front. We were expecting 4,423 crores. It's come in at 4,230 crores. So instead of seeing a 9% bump up, it's seen about a 5 to 6 odd % bump up. You have to remember that there was an exceptional income of about 108 crores last quarter. So while looking at the bottom line, it's a dip from 550 crores to 430. But if you remove that exceptional income really of about 108 crores, we're comparing it with a figure of about 437 crores. So it's come in at about 430 crores versus 437 crores, possibly on an APAT basis. I'm assuming there are no exceptionals in this quarter. Last time there was about 108 crore exceptional part. So in terms of an APAT basis, that's also disappointed the street, because we were expecting to see a bump up of about 12.5% to 492 crores. That's not happened. It's come in a whole 92 crores lower at about 430 crores. So absolutely flat on a year-on-year basis versus 437 on an APAT basis. That exceptional which we saw last year of about 108 crores makes that figure look a lot worse. But net sales also at about 6 to 7% higher at 4,230 crores is slightly below street estimates. Touch upon the HUL number in a little bit, but back to Jindal Steel and Power. Mr. Maru, thanks a lot for waiting by. Any word on the demerger now possibly of your power business, about 10-odd% stake to fund some capex plans?
Yeah, in fact, the power business is already in a separate company, Jindal Power Limited. But yes, we are looking at IPO. We are looking at about 10%, and we are thinking that we should be able to do in the current financial year. We are doing preparation for that.
But it would be 10%, and how much would you be looking at raising?
See, how much money will be raised, that will be decided a little later. I mean, it all depends. We are still talking to various people, trying to understand the whole valuation exercise. But 10% is the amount that what we are looking at. An amount, final amount, how much money will be raised will be finalized a little later.
Mr. Maru, just coming back to one point that I didn't get clarity on, you had planned earlier to scale up your power portfolio by almost 4 times by about FY13. Is that, is that plan in progress? If you could give us a status check on that. And also, did you achieve financial closure for 2? You've proposed about 3 units. Have you achieved any kind of financial closure?
See, as I mentioned, that we have already achieved financial closure of 1000 megawatt, which is operational. We have achieved financial closure of 2400 megawatt. We have achieved financial closure of 1350 megawatt, which is getting ready.
All right, Mr. Maru, thanks a lot for joining us with that perspective. Switching